Hi guys, Joshua Tharby here. I hope you're all well, and I'm back today with another tax saving tip. So today I'm talking to you all about what you should consider and what you need to know when setting up your limited company. So limited companies, ever since the tax changes back in 2015-16, have become the most popular way to invest in property. This is as a result of all of the Section 24 changes, which made it a lot more expensive for landlords to run their business in their own name. This was through the mortgage interest restrictions, which as a result made higher rate taxpayers basically pay 20% more tax on their interest payments, as they were disallowable expenses and they only got that basic rate tax credit. This led to pretty much every new property investor getting a limited company in place to buy and hold property over the long term. So when setting up your limited company, you should really have all of the information to hand to give to your accountant to make sure that you get it set up as soon as possible. The first thing is really to make sure that a limited company is the best thing for you. There are several different ways of holding properties. Holding property in your own name can still be worthwhile if you are a basic rate taxpayer, you don't want to grow a massive portfolio, or if you're a married couple, potentially look at a partnership, an LLP with your other joint venture partners. Don't just assume that a limited company is the way for you. A lot of people assume this, and as a result it's a lot more expensive later on down the line to rectify this and to basically come out of a limited company. So assuming a limited company is for you, make sure you've got the company name that you need. That's the first thing. Go on Companies House, see if your chosen company name is available, and then you're going to need details of all the shareholders and directors. So if it's yourself on there, it's your partner, your wife, get them in as a shareholder if they're going to be involved in the business. They might even make sense for a tax planning point of view if you're looking for inheritance tax planning, whether you go for just a standard company with default articles of association, or if you go for a smart company with the alphabet shares where you start to accrue capital outside of your estate, or you mess around with the income and dividend rights. Make sure that you've got the best possible structure. The only way you're going to find this out is by speaking to a property specialist like myself or another firm. Once you've got all this information ready and you are happy to go ahead, pull the trigger and get your company set up, you need to pass all this information to your accountant. They will then prepare the forms to Companies House that's going to start the process of your company incorporation. At the moment it takes about 24 to 48 working hours for Companies House to acknowledge and incorporate the company on your behalf. Once you've done that, then your company is set up and you need to go ahead and start to get a business bank account. At the moment, using the likes of Tide, Starling and all of the online banks, it's very easy to get a company account set up, usually within a day or two. And then it's just a case of having all this information, your UTI, Companies House authentication code, get them ready, because when you buy a property, your solicitor is going to want these. Once you've got the company set up and you're buying property, you should really have an accountant on board on a monthly basis so they can start working with you, providing you with proactive tax advice, bookkeeping software, so you can really start to track your profit and loss and understand the tax savings that are available, such as what expenses to put through, charging interest in your director's loan account, and other kind of tax reliefs that are going to be available compared to just holding off for a year. They're thinking, crap, I need to get an accountant on boat. And then by that time it gets to that stage, you've already missed that year. The year's gone. A lot of the tax planning that has to take place during the financial year, so that boat has unfortunately sailed. So by that recommendation, we always suggest getting an accountant as early as possible, because they're going to be able to give input to your business, input from a tax perspective, and ultimately help save you tax. I hope this video has been useful. Please do give it a like if you found it useful. Make sure to hit that subscribe button so you don't miss out on future videos. Other than that, thank you very much for watching, guys, and have a good day. Bye.